Chartered Accountants, welcome to this budget talk. I am Lina Doman-Brett, Vice Chairperson of the ACCA Network Panel, and very pleased to have you. The room is full. Thank you for being here. Budget 2017-2018, rising to the challenge of our ambitions. This is the theme of the budget presented by the Prime Minister, Minister of Finance yesterday. And today, jointly, MIPA and ACCA are very happy to have you here today to discuss about the Budget Forum. We have our guest speakers to answer questions, to discuss, argue, and see what is good, what are the good measures, and what are the not too good measures, or what is missing from the budget. So to start with, we've got the apologies from Madhvi Ramdin Clark, head of ACCA Mauritius, for not being able to make it for today. And so many of you yesterday have watched this budget presentation. The 5 main challenges that the budget intended to answer was, the first one was fostering higher growth or more and better jobs. The second, investing massively in the infrastructure of the future. Third, further improving the quality of life of people. Fourth, ushering in a new social paradigm. And fifth, consolidating macroeconomic fundamentals. Our experts here will tell us whether the budget has met these 5 central challenges. So we have today among us 3 very reputed panelists who have kindly agreed to analyze the budgetary measures announced and discuss the implications. I think all of them 3 need no introduction. Pierre Dinan, FCA, consultant and economist, will address the macroeconomic aspects of the budget, focusing on the effects of the various budgetary measures on indicators like the unemployment rate, inflation rate, foreign direct investments, and he will also comment on the social challenges of the budget. Gary Gauria, FCCA Managing Director, SIM Taxend, will expand on the various types of taxes and the implications as well as the impact of measures announced in the global business sector. And third, Clancy Apavu, thank you Clancy for making it for today. FCCA Senior Partner HLB Apavu and Associates will comment on the measures announced on enterprises and investments.
But I was joking to one of the board members during our board meeting. I was saying that I thought we should call it a budget tea rather. And then he said, well, maybe we should call, it could be called as well a budget happy hour. So it's a Friday evening. So anyway, but members of the panel, all my friends, Pierre, Gary, and Clancy, the Madhvi is not there, so the fellow board members of MIPA, colleagues, ladies and gentlemen, members of the press. I presume that we have now sobered up from last night's national budget presentation from Prime Minister Pravin Jagnnath. In the past, we used to be ready in the morning and with the members ready and maybe not all information having sunk in, but this time we've had a few hours to think about all the proposals that have been put forward to the budget. And I'm delighted to say that we have, although it's not the case now, but we do have a full house today. We could have doubled the number of participants today. We had, unfortunately, we had a lot of regrets. We had to send regret messages to people who didn't get a seat. So hopefully those who are not there will be there in a few minutes, because otherwise it would be a pity that we have turned down quite a few and then others couldn't get in. I thank ACCA for taking the initiative of doing this event, and in fact, to listen to my quest last year, if you remember, some of you were upset that I said that it should be a joint event with MIPA, but it has been a very good initiative from ACCA to do this event with MIPA. The Mauritius accountancy profession is being spearheaded by MIPA, and this is something that we cannot get out of. It is only by joining forces with the qualifying bodies that MIPA will be able to progress. And it's only by organizing such events that you, members of MIPA, will be able to benefit. MIPA by itself, as you know, we are always coming with the same rhetoric about not having enough finances, not enough resources. But it's only by working with the qualifying bodies, with ACCA, with ICW, with CIMA, with all the others, that we will be able to progress. And that there needs to be a change of mindset, and this type of event will bring that attitude from you. This year's budget theme, as Lena just said, I think is very fitting to MIPA, the rising to the challenge of our ambitions. Because MIPA's objectives now is to fulfill the SMOs of the IFAC, because as you know, we're a full IFAC member now. And we need to overhaul MIPA financially and to restructure MIPA to be able to achieve those SMOs. For those of you who haven't attended previous MIPA events, SMOs are Statement of Membership Obligations from IFAC. What we're doing at MIPA, we are not standing still, although I'm doing so now, I'm trying to move as well. But last April, we organized a pre-budget roundtable to be able to compile the representations of our members. It's a pity that, again, each and every one of us send our representation. We are a very strong community, and we have to realize that. We have 3,000 members. Siksha, how many do we have now? 3,000? Plus or minus 3,000 members. And this is very strong. And effectively, we need to be able to propose changes together. And broadly, the representations that we made was with respect to fiscal issues. One of them which affected us was the TDS on accounting services, which all of you know about. And MIPA regulatory issues with respect to people who do not pay their dues, they're exempt, considered exempt members. And also maybe to widen the definition of member firms. But all these, for those of you who I won't go on, I won't harp on this, but these are broadly the proposals that we made in our representations. Hopefully the new Finance Act will rectify these I wouldn't say shortcomings, but maybe things that need to be improved in the legislations at the moment. MIPA will be organizing very soon another forum of accountants. Book your diary now, get your smartphones out on the 19th and 20th of July. And this will be on the theme of the role of accountants in economic development. The first day will involve specific training on IPSAS aimed at the public sector. We also have in the pipeline a training session on new audit reports that we are still trying to find a proper date for that. And to follow the pre-budget roundtable that we did a few months ago, we are planning now to do a post-finance bill consultation, so that after the finance bill is out, we can come together and discuss and perhaps make proposal about what we think of the finance bill and maybe lobby towards having the laws more accurate or precise in terms of what we think it should be. On the national budget itself, I hope that the appendices of the budget do not contain a rabbit out of the hat surprises that, as they did last year, where we had the TDS issue, we had the rotation of audit that was proposed, we didn't know about it, we were not consulted. So I haven't seen it, so hopefully we will get some guidance from the panelists. But I'm not going to comment on the budget. I think Pierre, Gary and Clancy have been mixing the paint longer than I have. I'll leave you under the influence of the wisdom now. Thank you very much. I wish you a very informative afternoon. Thank you very much.
Hi ladies and gentlemen, this is Delhi School of Magic coming for the first time in Mauritius. Get ready to experience a fabulous, mesmerizing, magical family entertainment shows with Kettle's Entertainment in collaboration with CTV, giving you this show at J&J Auditorium on 9th and 10th June 2017.
Where we are again to look into the budget like last year, look into the budget of Mr. Jugnaut. I have been asked amongst the three panelists, my job is to sort of summarize the mechanics of the budget and also in the second part to comment on the social measures. But if you will allow me, I shall also make a few comments, general comments at the end. If we look at the budget in a nutshell, it's a budget for 127.7 billion of expenditure. 127.7 billion rupees of expenditure. As against the revenue of 112.3. Note that in this 112.3 of revenue, both capital and recurrent, 5.7 is coming from the closure of the two funds, the building fund, it was called, I think, and the resilience fund. This date back many years ago. So they are being closed, and 5.7 are coming into the consolidated fund. So we will now be dealing, as in the past, only with the consolidated fund. Note also, and that's interesting, that in this 112.3 of revenue, there is 5.39 billion from the Indian government, from the grants, I suppose, which were given some time ago and which we all remember what they are due to. So 127.7 expenditure as against 110.6 in this year, which is finishing. So 127 against 110, quite an increase in expenditure. But of course, the expenditure for this particular year, 110.6, is lower than what had been originally forecast, estimated, which was 117.4. So we have underspent in this year, and next year we are expected to spend still more. Now, as regards revenue, you will be interested to know that VAT represents in this coming year, will represent 59.8% of total revenue, of recurrent revenue, 59.8%, whereas income tax will be about 23.4%. The same sort of ratios apply to this year, which is finishing in June of this year. On the expenditure side, note that social expenditure is expected to equal 66.3 billion, which is 11.2% more than in this year. In this year it was 59.6, so an increase in social expenses. By social expenses, I mean housing, health, education, and social protection. Now, so this is the picture, the very broad picture of the budget. Coming back to revenue, we must also note, I think I mentioned this VAT and etc., so I don't think I'll go further on that one. Now, capital expenditure in this year, which is being completed, had been forecast at 14.47 billion. 14.47 billion is going to be only 9.8. We all know the criticism which is leveled at government that they announce projects and they don't proceed. Underspending, which is one of the usual problems, and this is capital expenditure, which supposedly is to help for the development of a country. So that's 2016-17. Now if we go to 2017-18, the next year, they are providing for 18.8. 9.8 this year, 18.8 next year. And this, of course, includes 8.8 for the Metro Express. And the Metro Express total project, and this is to be found in the 3-year development plan which accompanies the budget, the total for Metro Express at this stage is 20.9 billion, of which we are expecting, government is expecting to spend in the coming financial year 8.83 out of a total capital expenditure of 18.8. Just to give you, therefore, the importance of the Metro Express next year, and supposedly we shall be seeing a lot of chantier around us in Mauritius. Expressing now these billion rupees in terms of GDP. I must say that in this country we have been lucky so far to contain government expenditure to within 25% of GDP. We know that in the large developed countries you can go up to 45-50%. Knowing the efficiency of government, I am rather happy we are at 25. So, in actual fact, for the year 2017-18, the recurrent expenditure and the capital expenditure taken together will represent 26.6% of GDP. GDP, you might like to know, is forecast at 478.7 billion. So it will be 26.6 of GDP. Provided it is properly used, it's okay. Of course, when we talk of revenue and expenditure, we come also to the budget balance, which unfortunately is always a deficit, and this deficit is projected for next year at 3.2% of GDP. 3.2% of GDP it is for this particular year, which is finishing now, 3.5. Looks reasonable, but one would be happier if it were less, because it just adds on to the public debt. Let's talk about the public debt. The public debt, as at the end of this year, is equal to 295.7 billion. Remember, GDP is about 447, 450, and the total debt is 295.7, 66.1% of GDP. Quite rightly, many people are commenting that this is too much. Just to see it in a relative way, there are countries with over 100%. That is not to say that we should do it, but just to see. I think personally, what is a bit not too good to happen, that it's not the level, but it is that it is rising from year to year. It is rising from year to year, although the minister is now saying it will go down next year to 63%. But let's not forget that government itself, not this one, but a previous one, the National Assembly, voted, put it in the law, in the public debt management law, 2008, but by December 2018, we would be at 50%. And now we are at 66, hopefully going down to 63 next year. And there, I wish to comment on what looks to me like a clever trick in the proposal of the minister, that in future, public debt will no longer be given on a net basis, but on a gross basis. Now, we are accountants, we know what net and gross mean. So when I listened to him, I was wondering what it meant. So I went to do some research. In actual fact, we were getting the public debt figures gross minus some cash which government might have here and there, or by some discounting of the public debt of institutions to the extent that they can bear the debt themselves. There were some calculations. And the minister now has decided, for the sake of transparency, that's what he said, for the sake of transparency, to give it on a gross basis. The trick to my mind is that he says, I will change the law. And of course, when you change the law, you will easily also remove 50 and probably put 60 or 65. So it's a nice, clever trick. Right. So I think I have talked enough about the budget, the mechanics of it. The social measures, and that comes in, I think, part 4 of a budget speech, when he talks about further improving the quality of life of our people. And he has provided for short-term and longer-term measures. So he's spent some time talking about water. I'm very happy to know that there will be steel tanks placed at the disposal of people in 21 regions. I'm very happy for them if they don't have the water, but I am afraid this does not go well with what we think of our country as a country which pretends to be high income tomorrow. I would rather have my water in the tap. But anyway, that's a measure which he has taken, and okay, we are happy, but I was surprised. A lot of measures, 15 mobile plants, duplicate boreholes, financing of water tanks, rainwater harvesting in schools. I think it should be rainwater harvesting in all houses, as we do in Rodrigue, I understand. Water treatment plant at Bagatelle. But one surprises me. I thought Bagatelle was ready for use. A new Rivière des Anguilles Dam, etc. 264 kilometers of pipes. So all this is very nice. We applaud if we want to improve the water, our water situation. But I mean, we have been hearing a lot for some time. The minister responsible for water was saying it was going to be a private operator. Is it still on or is it out? No mention made. Amongst the some other social measures, upgrading of public beaches, very good indeed, but I could not help thinking, what about upgrading of towns? What about upgrading of towns? We've heard that they will spend money on the plaza and Kurpip. I just wonder why they have been allowed to go into that derelict state. But the towns, I don't know if you share my view, but I think our towns, nos villes sont laides. They are not nice to look at, and this is one thing, not only which would be good for us citizens who pay our taxes if we live in towns, not in the rural areas, but at least also it could attract tourists. So not much going this way. National sports policy, we can only be happy about this. Volunteer Mauritius. This I think is a good idea. Teaching life skills to the youth. Teaching life skills. I think this is terribly important. I was saying the other day, I'll say it in French. Nous avons le savoir. Nous avons tous, quand nous allons à l'école, nous avons le savoir des connaissances. But, page 29, we have to learn skills, ça veut dire le savoir-être, et enfin le savoir-faire. The skills is the savoir-faire, that is, specific métier, and then le savoir-être, which is terribly important, which is about being at least a good citizen. And if Volunteer Mauritius can do that, I would be very happy. There is a visitor medical visa which is coming for medical tourism. I think that's a good idea. And then 624 additional health personnel. We hope this will reduce the cost of money spent in private hospitals, as said the other day in an article from the OMS. Right. People facilitation bill. This is for every one of us. And the minister said, I quote him, to avoid office hopping. You understand? Now, of course, there are the popular social measures. It's always like that in any budget. But we are happy because this is going to help the poor, and we all know, as the minister said, and I think we would all agree with him, there is some inequality is spreading in this country, and we will probably know the exact position in a few months when the Statistics Office comes out with its this household budget survey. If so, flour, 1 rupee down per half kilo, and what else? And then of course negative income tax. But negative income tax, Pana, as you were saying, I think you have to go and read what is at the end of the budget speech, and you will see but it is not 1,000 rupees for everybody. But I'll let you go and find out, and there will be a lot of conditions, and what is very clear, this is for employed people. This is not allocation chômage. This is for employed people. It's okay, but we'll all have to see how much it costs also as we go along. Therefore, there will be, and he has mentioned what he proposed last year is now a subsistence allowance for 8,000 families. So I like this proposal. 2 homes for low-income elderly residents, old people. He is providing for 50 million capital expenditure, but he said this will be managed by NGOs. I think he's right, if you have serious NGOs, but at the same time, he has slightly come back from his big error, to my mind, of reducing CSR to 50% and 75%. Now he's cancelling this. Not cancelling, he's delaying the 75%. I think there has been a lot of outcry in the country. Serious NGOs should be able to get rid of this 2%, and that's it. And of course, a children's bill in order to deal with domestic violence. So by and large, these are the measures, the social measures. If you will allow me, I'll try to complete my presentation with a few general comments, if I can find them. Je ne vois plus là. Yes. No. Well, perhaps what I would like to say, it's a very down to earth budget, au ras du sol. And but doesn't mean it is bad, but it's very low level, no excitement. Okay, that's a question of presentation, but it is largely void of economic analysis. There is not much talk about the economy itself, nor about the effects of Brexit, nor about the effects of Trump and all that. So let's hope that this task of seeing where our economy goes will be taken on board by this proposed Economic Development Board, which, to my mind, is a way of going back, it's a revival of what used to be the position in the 70s, 80s, which is development planning. And I know there has been some requests for that from some quarters in the recent past. But the Economic Development Board should be really looking at the future. I mean, where are we going? The world is changing. And of course, he has also said that there will be a National Economic and Social Council. It's a bit of a shock to me because there is already one. And I don't know if there are members here. There's already a National Economic and Social Council, and which will be meeting on a quarterly basis. I don't know how it will work, whether it will be meeting public and private sector, but we hope that these two institutions will be really taking it on board the economy, and of course, the economy and the benefits of its economy for social to try and clear social problems. A good point about having our embassies being efficient in Africa. This has been requested in the past for a long time. But let's hope that this time the minister is listened to. He said consolidation of our economic footprint. But I think it's not only Africa. I think it's also Western Europe, where all this Brexit is will be causing problems. Of course, a large part of this document is of infrastructure. I'm not going to dwell on this. You have all heard about what he has in mind. The other point, which is I think which is very good, provided again it is put into effect this emphasis on research. We Mauritians, public sector, private sector, everybody, we are not research-minded. MSIRI stands as an outstanding exception. So it is providing for measures to taxation measures, which probably Gary will take on board for research. I think this is a very good point. There were five sections to his report. The last section was a disappointment to me. He had announced to consolidate macroeconomic fundamentals. Big words. Consolidate macroeconomic fundamentals. So I listened to him after nearly 2 hours. 2 hours on a gross basis. On a net basis, it was 100 minutes. I listened to him, and he just said, transparency. For transparency, I closed the Build Mauritius Fund, I closed the National Resilience Fund. Very nice. Second point, Public Debt Management Act will be modified. I have just told you now what I think is a little trick. And that is all which we heard about consolidate macroeconomic fundamentals. I am rather disappointed on this. And I think there are at least two things on which he could have dwelt, two issues. One, will the universal old age pension continue or not? Can it continue or not? No mention. This country, about 15 years from now, is going to have a declining population. What are you going to do in terms of demographics when your pyramid of the population will finally become like this, if it doesn't come like this, like a 2P? What's going to happen? Thank you very much.
Friends, good afternoon. The happy hour is continuing. I'd like to talk about the business environment and whether the budget speech, which has set 4 important goals, which Lena developed for us, right, identified for us at the beginning. There will be growth strategy, investment, there will be massive investment in infrastructure, quality of life is going to be improved, there is a assuring of a new social paradigm, and macroeconomic fundamentals, right, are going to be consolidated. I think that we're also aiming at a growth rate of 4.1% for 2017-18. I do think that the realization of all these objectives depends on a proper context, on a proper environment for business development and business continuation. I would comment on the aspect of a business environment from 4 perspectives. I'd like to see first what are the business facilitation measures which have been announced. I think there have been a lot of measures which are good. There have been some which have been very ambitious or over-ambitious. We look into them. But there are some which are really missing. And then I'd like to touch an important sector, the SME sector, to see what has been done, and really, because this is going to spur economy, this is going to give us the context in which we are going to develop really the growth rate, achieve that growth rate of 4.1%. And then I'd like to come on what we call the innovative industries. There have been a number of innovative industries or innovative sectors which have been announced in the budget, and to see whether. Last part. Thank you. You can hear me from there, huh? You can continue, okay? Speak a bit louder. Yes, I'm going to touch on the innovative industries because this is a real. That's okay. Yeah. I think this will work also. Is that okay? Hello. Fix up the technology. And then I'd like to come back on what has been done and what has been proposed to consolidate the economy on sectors which exist here. I think this is a big thing which is missing in there. At the same time, and this is the reason why we don't understand how the consolidation of fundamentals is going to be made. So let's start with business facilitation. There have been a big proposal to set up an economic development board with 3 directorates. The first one, economic planning and development and planning, investment and export promotion, and the management of e-licensing promotion platform. I think that this is going to group 4 main existing bodies: the BOI, the Enterprise Mauritius, the FSPA, which runs the global business, and Mauritius Africa Fund. When you look at it from a strategy of centralization, it looks very good. We said, okay, probably this will reduce costs. This is going to create synergy. One thing that I retain which is very good in that is the concept of economic planning. As Pierre was saying, since a long time, I think people, economists and accountants and people who look at the economy have seen that there is something which is missing since they have dismantled the Ministry of Economic Planning and Development. Since then, everybody is coming with a budget. Each time there is no real planning, as we have in Singapore, you have in Dubai, you have those small economies which are growing. There is no planning. I hope that this directorate is going to come up with economic planning and real aspect of planning for the short and longer term. But we should remember that it's not a ministry. It is going to be a directorate among 3 others. And even if we think that this is going to be synergy, to bring in synergy, I have got serious doubts that this is going to be very effective. I tell you why. Because we are going to get 3 main things which are going to be merged in that. Investment, which actually is being done by BOI, export initiative in order to help SMEs and other sectors to export, which is done by Enterprise Mauritius, and global business, which is really at a very turning point, which is really has to face a lot of challenges. FSPA, which is specialized to give that focus, all these are going to be put together. Are we going to get the real focus that we need for 3 main pillars of the economy? I am doubtful about that. So if we lose focus, because the strategies for global business, the strategy for export, the strategy for investment on the domestic market, they are different. The target markets, the target clients are different. The strategies to be put in place are really different. And I can't understand whether on the basis of 3 directorates, right, within one body, this is going to be realized correctly. So let's hope the future will tell us, right, whether this is a good initiative of thing going forward. Let's maybe be more positive now to see about what are those measures which have been announced, which is really to create business facilitation. Our friend Dima was just invoking a question about job creation. I agree fully with you. There is nothing in the budget where you see how many jobs are going to be created, apart from jobs which are going to be created in the public sector. We can't see anything really how the economy will be driven, the different sectors are going to be driven in order to create wealth and achieve that 4.1% of growth, right, for that year coming in. Probably there have been a lot of emphasis on infrastructure development. And here, I don't know whether it is over ambitious. We have been told about the new roads coming in of Saint-Jean, of Jumbo or roundabout, of flyovers coming in. I think this makes 3 years in a row that we are saying that this is coming. There will be Metro Express which is going to come. Very good. So there has been a lot of infrastructure work which are announced. And I was saying before, very easy to announce them and then they are carried forward from one year to the next and then it become a new project, change the name, right? I'm afraid that it could be this way. But let us hope that this is not over ambitious and that really infrastructure is going to give the drive for growth, is going to create employment. If really this takes on as has been announced, it is true and it is normal that it is going to create new jobs, and of course there will be a good momentum, right, in the work sector. As you say, there is a lot of graduates not still working and so on. So this is not apparent when you read the budget, and we don't understand how jobs are going to be created. Right? Previously they were talking of 26 jobs in 1 year. Right? They are throwing about 2,500 jobs, but still this is questions to come. Now, among the business facilitation measures announced, which we feel that these are very positive aspects, they're going to set up what we call a BIPA, a business and investment platform for Africa. But here again, apart from cross-border investment from Mauritius into Senegal and Cote d'Ivoire, right, and Ivory Coast, I think that there has been a lot of missing of the Africa agenda. This is the fast-growing economy coming in. I have not seen big measures and don't know whether ambassadors will be enough in order to drive our agenda for Africa. And if we see the global business, the next move of the global business is going into Africa, I don't see anything in the budget for that, apart from 2 cross-border right investment in Senegal and Cote d'Ivoire. There will be finalization of the SEPCA with India, free trade agreements with China, and European free trade associations. Okay, how they are going to happen, right? But there's no word about what will happen with Brexit, right? I would expect on the cross-border, on the international scene, how this will affect economy and what policies are going to develop for us to deal with that. Export enterprises, this is very general, right? Not to particular sector, are going to be taxed at 3%. This is a laudable recommendation and a laudable measure coming in. Instead of 3% or 15%, export enterprises will be taxed at 3%, right? Which I think is going to give a good push to the economy and also hopefully create jobs. There will be a number of, Gary is going to come more on the tax measures, but I think in terms of business facilitation, I need just to make a word on the 8-year income tax holiday for new companies which are going to be engaged in 4 sectors: pharmaceuticals, medical devices, and high-tech product. 8-year tax holiday for innovative regime, which are going to foster our intellectual properties. Extension of the speed to market scheme to the export of jewelry, medical devices, fruits, flowers, vegetables, and chilled fish. Extension of the 8-year work permit policy for expatriate workers to all export-oriented enterprises. I think at Business Mauritius there has been a lot of requests in that respect, because at the time there was policies coming in to say that we should not get foreign workers to come in because we have got people who are employed here. But the mismatch, you have understood now, government, that the mismatch will continue because there are certain labor that we cannot get in Mauritius and that we are going to get that. And also this will strengthen certain industries because now that work permit given is going to have a span of 8 years instead of 3 years as it was before. High-tech machinery brought in by investors will be reckoned against the requirement for them to invest $100,000 when applying for investors permit. Various incentives are announced to businesses who invest in solar energy. BOI to carry out a re-engineering plan for 125 licenses and permit. I hope that this is going to reduce the red tape that we have for a lot of permits. Elimination of registration duty and land transfer tax on any transferable property for the setting up of a business involved in high-tech manufacturing. So this budget has got a lot of content on high-tech, on new technologies. Registration duty payable on agricultural land leases for 10 hectares is going to be exempted, waived out. There will be no CEB and CWA and WMA permits for building permits, which are going to be applied for in zones which are already developed. So because in some cases people are complaining of waiting for more than a year or nearly 2 years, right, to get permits gone. Planters will obtain subsidy on the cost of CCTV camera with video surveillance. This morning I was coming on a planter who was intervened on Radio Plus, and the man was saying, bien beau monsieur, pour gagner caméra dans le carreau, mais comment pour gagner courant? Right? Solar energy. Solar energy. More complex for him. Right? I think this is a good measure. I think in the precept, it is a good measure to come in because, of course, right, it forms part of the whole concept of agriculture, plantation, so that they get security for it. But still, we have to see the small planter, right, to bring right electricity to his field. Right, that will be an issue. So there are, as I've said, a few measures which are really on the good side, and we have yet to see, right, how they're going to be realized. I will not go into those massive infrastructure projects which have been announced. And when you look at the budget, you have the impression that when you talk about the infrastructure, there was more an agenda to explain to us Mauritians or taxpayers how the money coming from India is going to be spent. Right? Rather than really to tell you how we are going to make it happen, those infrastructure products, and whether within 1 year they are going right really to be implemented. Now, on the side of the SME, I think we've seen the same rhetoric as previous years. Right, there have been a change of name of SMEDA, which is going to become the SME Mauritius. Right, there have been a bit of changes in precepts about loans coming up from SME, from DBM, and we've seen that loans are going to be at 6%. But what we retain, which is a very interesting thing, is for micro enterprises, the 6% rate is going to go down to 3%. Right, for micro enterprises. Now, SME profits for export of goods will be taxed at 3%, as it will be for all export-oriented enterprises, instead of 15%. And then also, I found that SMEs are going to get access to fairs in different parts of the island, including Maybird, Goodlands, and so on, that people can come up with their products. So, the business environment, right, there had been certain incentive, but really, right, we don't understand how the economic puzzle is going to be fixed. SMEs, we've seen measures about loan. I thought that there had been, SMEs would be able to get loans without facility based on a business plan. This will give a bit more work to accountants, so they can prepare good business plan, as it is in the US or in the UK, where you come up to the banker and you say, okay, I've got a good business plan prepared by my accountant, so can you give me money? Right? No, the bank said, the accountant, okay, the business plan, okay, I look at your figures, but I need the collateral security, right? So in some cases we know the bank takes the car, the floating chart of the business, the house, the garage. Fortunately, it leaves only the wife out. But still, I found that there had been an amendment to the civil code, which is announced, that now charges are going to be imposed, not essentially on fixed charges, but also banks will be able to take charges on movable assets. So maybe this is going to lessen the pressure, right, on people going for finance and who need to get collateral securities for loans. The budget also provides for some innovative industries, and I think that it is good to talk about that. And probably this is going to give us, right, the drive, right, to economic development. I found that the Mauritius Research Council is going to change its name. It will add an I in it. It will be going to become Mauritius Research and Innovation Council. And its name will cater for innovation and research, as Pierre said, right? I think there is a lot of emphasis on research and development, and it was high time that we think about research and development. If we look at big economies, there is a lot of money which is spent in research, and this also definitely give us a lot of reliable and effective platform on which industries and new businesses can be developed. Singapore is a small country, and you can't imagine the amount of money that is spent on research. And I'm very happy with that, right? About the National Innovation and Research Fund, which is going to be set up to finance research in public and private institutions. There will also be academic research, which is going to be funded by an amount of 50 million rupees. This is going to be given under the aegis of TEC, of TEC. There will be Biotechnology Institute, which will be set up under the aegis of the Ministry of Agriculture for food security. Among the innovative project, there will be Pierre mentioned that about a new innovator investment permit. Somebody who comes in and is going to invest in new technology, provided that he commits 20% of his operating expenses in R&D, right, he's going to be able to secure an investor permit in that department. There will be quite a number of tax incentive on research and development. I would leave that to Gary to expand on that. There will be the use of drone technology in agriculture. I think this is a very good use, right? This will help, right? A lot. It will start with sugar, with non-sugar products, but drone technology is used already in Israel, is used in the northern countries, the European northern countries, where it has become a very effective tool in order to monitor what's happening. And this is a very good thing. Use of biomass such as cane trash and wood chips by PPAs who operate in the sugar industry. Extensive growth of macadamia plantation. I do not have time to look at what macadamia is, but there's a lot of emphasis, right, that there will be a lot of growth of macadamia plantation in view of developing a new export niche market. Right? We need to see what are the properties of macadamia. There will be issue of new food. There will be a new food processing development which is going to promote importation of products such as maize, vanilla, cocoa, and medicinal plant, which are going to be used as raw materials for value added locally. I think this is a very interesting measure because it will enable and it will incite local industries to bring in value added on those raw materials, and of course eventually not only for the local market but for export. And of course when you export you're getting taxed at 3% only, right? So this is a very good incentive. As far as the ocean economy is concerned, I've been a bit deceived. I thought that since a long time we were talking of ocean economy since 12 years. We're talking of the blue economy, of the water, the deep water, right, which runs at 5,000 or 2,000 meters down. Nothing has come out of that. We are still waiting for it. And we've seen a lot, but still there are some incentive for those companies which are going to invest into the water cooling system. We have some, on the fishing industry, I expected quite a lot of measures to come in, right? And quite deceived to see that we are just not going to extend the fishing permit for foreign vessels from 1 year to 5 years. I would have been more pleased to see that we are going to give more incentive to fishermen, give them the techniques, give them the boats which they can go and fish off the lagoon, right? As we say, don't give them the fish, give them the rod to pick up the fish. Right, but this is completely missing. And again, the fishing industry, right, has to wait for more, right, because there is no real incentive for it to move forward. Also, there is a measure which I would have thought that maybe I will talk about that when we come to the real estate, right? And so there are certain measures. I think R&D, if it is well, there is a fund which will be there. There will be a institution which is going to give the drive, and there will be money that they're going to go down to the academic research. So which means that this is going to give us different platforms on which to build up new industries. Now, I'd like to talk about what is proposed in our existing sectors. Because if you want to consolidate the economy, if you want to get the fundamentals right, and consolidate those economic fundamentals, I think not only you're going to propose new projects or new measures for new industries to come, because these are new. We don't know how they're going to take shape, how they are going to be. I think there is a must for you to consolidate, right, what is existing. I take one industry, the tourism industry. There's nothing for the tourist industry. Apart from KLM, which is going to go through Germany and, to Dutch countries and to bring more tourists, I found that the only measure that there is that now hotels will be able to install gaming machines in their establishment, but these are going to be restricted not to you gentlemen and ladies, Mauritian, only to non-residents and tourists. Probably the incentive has been formulated in the hope of attracting our people from Asian tourists, because we know that Asian tourists are very prone to gaming or to play, right, or to go to the casino or whatever, right? But apart from that, there is nothing, right, which really consolidates, right, the thing. And I think this is left to the private sector itself to do the drive and to continue to develop economy. Fortunately, the tourism industry is still on the high rise, right, which is good. Financial services sector, Gary is going to amplify more on that. At a time when the global business is facing a lot of challenges, Right? We know about the Indian treaty. We don't know what is going to happen next year after March 2019. There has been no footprint set up of how we're going to deal with this. There is the moving out of Brexit by the UK, and now there are more problems for the UK because Conservative doesn't have a majority, right, to do the exit properly. And also, right, we are going BEPS coming in next year, right? We are getting new things coming in, right, with the CSR coming in. And as Mauritius, as you know, is very quick to go and to sign in the first place. I find some people, right, just make it a big pride that Mauritius is the first one to sign FATCA in Africa. We are the first one to go and sign CRS. Go and see what is being done in Singapore. We don't sign. We don't have to take orders from OECD, right? We wait, we need to get bilateral agreement, and then we go for discussion. Unfortunately, right, Mauritius, right, we are very quick to sign, and then we see the result after that. So, private financial sector, the only thing which has been announced, right, concerning the global business, is that there is going to be a realization of a blueprint, which is a plan for the next 10 years, you know. How many hours it will take, how many months it will take to realize a blueprint, right? I think the industry can prepare a blueprint within a few hours. This can be done very quickly, right? But let us wait and then hope that this is going to give us incentive, that is going to develop the sector. But we have some important reservations about what is going. And if FSPA is going to be merged within a directorate, there will be no real focus in order to develop the sector at a time when we need to look for a new challenges and for new markets and for a new paradigm for the sector, right? I think that there is a step backward there. In the ICT sector, apart from a 15% decrease in IPLC, I've not seen a lot of things coming in. There is no real incentive or right to consolidate the sector. We'll see the birth of Mori Cloud, which will be issue and verify documents and certificates in digital format, which will be a good thing. A new cloud computing integrated platform will open a plug-and-play platform. When we come to real estate, I expected, right, that there would be quite some interesting measures. There is a very interesting point where I thought that government, there had been recommendations by the real estate sector operators in that actually we are getting a population which is aging. Probably this is why we welcome very much the idea of 2 homes for the elderly, right, and where government is going to do that and NGOs is going to manage. But there is a big market in the real estate, not only for Mauritius, for other people who wish to come and retire in Mauritius and want to go and spend there, you know, right? They are Swiss. Right? I've got Swiss clients who ask me, when are you going to open the doors for us to spend 6 months in Switzerland in the hot, and then we come here in Mauritius 6 months in the other hotter place. Right, which will be good for us because at a particular age we feel that Switzerland is too cold for us. So there is still ways and means of getting the home concept for seniors. Right, could have been since a number of time it is coming up in the recommendations of real estate promoters to bring forward the possibility of developing this as a preset, because people are prepared to invest, to buy, and to come and live. This would have given something which would be very interesting for the economy. So we're going to stay with these 2 homes to see how we measure that. A few things have been incentives which concern the real sector. Have been that there will be no more settlement permit when there is an excision of land of less than 5 hectares. A Mauritian citizen who purchased a plot of land under the Smart City scheme now has 10 years to complete construction of his residence instead of 5. But yet we need to see the Smart City coming first, right? And then we'll see the other people coming in for their own residence. Interesting thing is that non-citizen who invests in the IHS, right, the investor hotel scheme, previously they did not have tax residence. Now, right, with an investment, even if it is at least 500,000 USD, they are going to get residence with an IHS investment, right? And also there is the non-citizen acquiring a residential property for an amount of $500,000 will be entitled to a multi-entry visa for a maximum of 180 days per year for 5 consecutive years, and renewable every 5 years depending on the status of ownership. A good news for accountant is that all casinos and gaming houses will henceforth have to prepare accounts under IFRS, which means that they will get a bit more work. They will need to be audited for that, right? Because this is a measure announced in order to curb the trafficking of drug or, to get blanchiment d'argent. Okay, this is the environment which has been created, which is really the measures which have been announced. On a été laissé un peu sur notre faim, right? Ici on peut dire ça comme ça. And the very important thing that we note is that the budget seems to be hollow, as Pia was saying, in terms of economic construction or consolidation. Something is hollow, and there is no big enthusiasm to say, okay, there will be new things coming in and so on, right? So there is massive announcement in terms of infrastructure, right? But whether we're going to make it happen is a different story, right? Somebody was asking me this morning and said, hey, but there is Betamax, payment has to be made. Nothing has been said. I said, but there's nothing to say. You know why? Betamax case is going to become a legal case. When you go to the Supreme Court, it takes between 3 and 5 years. So this government will no longer be there. But we taxpayers will still have to foot the bill. Thank you very much.
Listening to my two mentors, one is an academic mentor and one is a professional mentor, I am sort of in the small space whereby there is also the happy hour waiting for us. I will try to be as concise as possible. So, hearing what Clancy was saying about uncertainties coming up with the PEPs, this is where, Clancy, it is very important to listen to the minister, which talks about macadamia. So, but not Macarena, macadamia. So macadamia is a small fruit, and I think I will be engaging into the plantation of macadamia, being that there is a lot of uncertainties coming in our way with PEPs. And I will also get the privilege of having the camera to supervise the plantation. So let's not be too gloomy about things. I've been asked to talk about changes in the tax arena as well as the global arena, global business sector. As there are not much to talk on the global business side, I will start with the global business side. So what have we got on the financial services? There is the development of the Economic Development Board. I'm not going to dwell too much on that. It has been adequately covered by both Pierre and Clancy. But what is of interest to us in view of the uncertainties that is looming is the minister announced the blueprint, not footprint, a blueprint that will be conducted by the Ministry of Financial Services, Good Governance and Institutional Reforms, in collaboration with the relevant financial services institution as well as FSPA, to develop a vision. I'm not sure whether we have, but we will have a vision for the financial services sector over the next 10 years. So this is much awaited. I had people in my team yesterday. The only word that they could recall out of the budget is the blueprint. So this is much awaited, and like one would say, like Nancy was saying earlier on, was blueprint, we can do it ourselves, but usually you get an expert to come do it for you. It's like you give you have time on your watch, you give the expert, he will tell you the time, and you say, wonderful. So this is what we are expecting from the blueprint. Let's wait and see. Further, I think minor measures that has come in for the global business sector is to position Mauritius as a jurisdiction of substance. I think this has been the key word for many years now. So, as you would recall, the FSC has, in the Financial Services Act, legislated that you should comply with 5 mandatory conditions and 1 optional condition. so that it gives you the eligibility of getting a tax resident certificate. So what in the optional conditions, you had 5 conditions, namely you should have an office, or you have an employee, or you adopt arbitration clause, or you make investment in Mauritius, or you will get your shares listed on the stock exchange, and lastly, you have reasonable expenses in Mauritius. So, as you would have guessed, most of the people would have been taking the arbitration clause. And to what extent it brings substance is questionable. So I think at least FSC has reacted and thought about it. It is not much substance we are talking about. But now they are moving to having 2 conditions to be satisfied to meet the substance test. So maybe next year we'll go for 3 conditions. We will see how it pans out. But for the time being, you would have to satisfy 2 conditions. It's a budgetary measure. Other measures is, I think, in terms of the Companies Act, will be amended to allow for the Islamic financial institution to use the accounting and auditing organization for Islamic financial institution. Because as you know, currently under the Companies Act, you have to prepare accounts under IFRS. So this is being extended to allow for Islamic finance. Additional measures concerning the financial services is it talks about the stock exchange will engage with Euroclear to transform the local debt market and set up international capital market with which would attract government corporates from Africa and other regions to issue multi-currency bonds. So this is something that I'm really looking forward for, because as you know, I have actually worked on listing of an ETF in Mauritius, which is something new, and these would be new products that we can offer to financial users. Another measure that has been announced is the special purpose funds will be aligned to those of GBC1. Mind boggles. So what is a special purpose fund? A special purpose fund is like a tax exempt fund, and it's like a GBL2. So this was enacted about 3 years ago and has not been used at all. Nobody was interested with that because of its limited use. Why? Because you don't have access to treaties and you are only allowed to use it for certain specific products. So the good thing is now they have realized that it is not something that is workable. They have said we will align it to GBC1. Why? Because GBC1 has access to tax treaties and it can cover a much broader activity. Additional measures in terms of financial services is the EDB will engage with stakeholders to create a regional fintech association. So this again we will have to see how it pans out. And the last one in financial services is it would request banks to have to raise their capitalization from 200 million to 400 million. This I think is much welcome. Personally for myself, I have been a big proponent of getting people to syndicate in Mauritius. So what happened in the global business sector is you have a structure, but when you have to raise loan, where do people go? They go to Singapore to syndicate, which does not create the right ingredient for creating substance. So by having that, because the main reason for not doing that here is the banks tell you they don't have the balance sheet. So having the increased capital will allow syndication happening into Mauritius. So that's all I can tell you about global business for financial services. So let's move to the tax measures. So, has been mentioned earlier on, when the minister talked, he talked about small and medium. I think somebody was talking about small and medium. But when you look at the annex to the budget speech, it says the 3% will apply on all profits derived by any company from exportation of goods. So this is, I think, telling. From my perspective, I think this is a wise move that the government has made, in the sense that it has always been saying that the global business sector does harmful tax practices because we ring-fence ourselves to get to giving that 3% tax rate to only global business. But I think by extending it to domestic companies and also looking at export-oriented, it just removes the ring-fencing, and this is a positive move, and this is, I would think, the argument that we can put to the EU to say that global business companies are not carrying out harmful tax practices. So I think it's clever, but the minister has put it more in the context of small and medium enterprise. We will have to see how it pans out. Other initiative, I think we've talked a little bit about that earlier on. Let's talk about that. The 8-year income tax holiday. I think the 8 is getting very lucky to us. Last year, you would remember when we had the regional headquarters scheme. It was an 8-year tax holiday. I don't know where they have got that 8 as a magic number. So if you are going to engage in manufacture of pharmaceutical products, medical devices, and high-tech products, then you will get that 8-year tax holiday. But look, it is very important. It is only available if you incorporate after the 8th of June. So if you had a business which was prevalent, you would not get the tax holiday. So it is only after the minister has pronounced his speech that you can use that. Francie mentioned that there is not much in the deep ocean, but I think here we have an 8-year tax holiday. If you are going to use water from the deep ocean for air conditioning, so this is a measure that has been issued. There's no measure, there is one here at least. They have seen that we have plenty of ocean, therefore use air conditioning installation. Other measures which are of interest is the company investing or spending on innovation, which has been talked as well. So you get an accelerated depreciation of 50% on capital expenditure incurred on R&D, as well as you have 100% deduction for 5 years in respect of qualifying expenditure on R&D in Mauritius. Another interesting measure that comes out of the ocean again, you have a double deduction for deep ocean. So if you're going to use this facility for your company, you get a double deduction for 5 consecutive years. So incentive for you to change your air conditioning system to bring ocean water in your air conditioning. Then you can get double deduction. New measure is, you know that dividends is exempt in the hands of whoever receives it, but as you will see later on, there is a move to look at dividends again. So now companies will be required to submit to the MRA a list of individuals who have been paid dividends exceeding 100,000 per year. So you will see the relevance in a minute. So you won't get away from it. Company awarding contracts. So this one is interesting in the sense that you have to operate TDS irrespective of the level of turnover. So these are measures for companies, and as you would see, there is not much. But for individuals, this is where it hurts our pocket. But for people like me, it doesn't hurt too much. I will show you in a minute why. but for people like Pierre, it just hurts a lot. So existing exemptions threshold has been increased to 5,000, between 5,000 to 15,000, and they have included a new ban for 4 or more dependents. So this addresses, Pierre, your issue about not having enough people. So is encouraging people to have more dependents. So you would have additional allowance. I think this is where it is. So this is the new ban. Before it was 3 or more, but now you have 3 dependents is 505,000, whilst individual with 4 or more dependents, they will have a deduction now of 550,000. Can't be half for wives. You will have your wife and before you had 2 children, plus your wife. Okay, coming back to, so this is the 5 to 15, the only one that changes is for if you have 4 or more dependents, yes? Other measures which we have to look at is if you're employing household employees, you get a deduction of 30,000, a maximum of 30,000. So this is a welcome measure. Relief for medical and health insurance moves from 12,000 to 15,000 for the taxpayer and the first dependent, usually the wife. And then for the children, you get only for 2. This one, they have restricted it to only the 2 children, so it moves from 6,000 to 10,000. I think this has been, people have been complaining on the radio a lot. Tomorrow you will hear that on the radio, that now they will exempt incomes for if you are providing financial assistance by the government to disabled people. So this has been some cry. And if you're investing in green bonds, any interest that you receive will be also exempt. This is an interesting one, is solar energy investment allowance, and the budget makes it clear it is for solar voltaic system, not for your solar water system. So I think people has been trying to get around the system, because you know you can, whatever you invest in the solar system, you can claim as deduction against your chargeable income. And if you have not, if you don't have enough chargeable income, you can still carry forward for many years. But I think that people were buying solar heaters and was putting that as deduction. Now it is clear that you use it only for solar photovoltaic system. Mauritian diaspora, this is a funny one. I think, I don't know anyone here on the Mauritian diaspora. So if you are on the Mauritian diaspora, you get a 10-year tax holiday. So now it is being cleared that you have to be with the same person or earning the same type of income for the next 10 years. If you decide to move to another employer, your diaspora regime gets cleared off. So you will have to pay tax. So I don't know why they have put that in, whether there was abuse, but it is there. Other measures is individual having a chargeable income plus dividend in excess of 3.5 million will have to pay a solidarity levy. You're not saying you have to pay tax here. You're paying a solidarity levy of 5%. So I will work an example in a minute with you to see how it works and how we get worse off. So if we let me complete that and then we'll go to the example. Other thing which is of interest, this is where I rejoin Panas. This is where the rabbit comes out of the hat. You have a 15% TDS on director fees. So what what was happening for global business companies, we have to provide 2 directors to be on the board, or else FSC will not give you your tax residence certificate. Fine. So what we do is we usually take 2 of our members of staff, we provide to the company, and we were providing them with services. So it was 2 guys who were sitting on the board of the company, and we were charging the client for director services. And we were not paying POI. Whilst, if you're a director, you have to pay POI on whatever fees you're paying. So they have said this is abuse. So now if you're going to charge director fees as professional fees, you would have, the company will have to apply tax deduction at source. So people who are not making profit, they will lose money because they cannot recover the credit, whilst people who are management companies who are making a lot of money, they will be indifferent. So it's just a question of cash flow difference you would have to pay in advance.
They all make profits.
According to FSC, no. Okay, the other one is a funny one. A funny one is basically in terms of tax residency, you have 2 tests that you usually do. One is if you are in Mauritius for 183 days, or you are in Mauritius for 270 days in the income year and the 2 preceding years. So I don't know why now they have decided to revise that to 225 days. I don't know whether some people who has been under the diaspora scheme wants to be classified as resident. That's why they were not fitting that 270 days. So they asked government, let's bring it down to 25. They can still be treated as resident in Mauritius. So this is an out of the ordinary situation. I don't have an explanation for this one. And last one is in terms of secrecy provision. You cannot use excuse of secrecy for not providing information to the MRA. And MRA, once he gets information about you, he can go and report you. So this is how life is with MRA. So a small example that I have sort of prepared in terms of seeing how this is me getting a little bit of dividend. So you have your salary, you have your dividend income, so you have 1.875. So 1.875 is very important. Why? Because then you can claim deduction for medical scheme, children attending university. If it is more than 4 million, then you can't claim all these fancy deductions. So assuming that the person is claiming, is earning that much of money, so you would have to determine whether he will be allowed to get the deduction. So he is still under 4 million, you're fine. So we will exclude the exempt income because dividend income is exempt income. And we apply, assuming that he's in category D, you will get 520,000, whilst last year he would have got 505,000. And you also have contribution because you have an increase in the ban. The medical contribution as well increases. So this gives you a chargeable income. So a person earning 1.8 million and having this deduction, you would see with the increase in the bans, he is better off under the new regime. So good news. We have 4,350 to spend on telephone. Whilst people who are earning some money and also getting dividend income, you would see I've kept all the figures likewise, and you would see here we end up with a chargeable income, lesser chargeable income of 3,430,000, Because of increase of the IETs and the medical allowance, we move from 3459 to 3430. So we tax it. We are supposed to be better off, but where it becomes so is the 5% solidarity levy. So here what we will do is we will take the total income minus 3.5, because this is the threshold. After 3.5 that we will pay the solidarity levy. So the difference multiplied by 5%, then you get an additional tax to pay to the government. So your net tax bill becomes 554 compared to last year. You didn't have that to pay, and it just gives you an increase. So they were so excited here that with the decrease last time, they maintained the decrease. It should have been an increase in tax line. So these just small illustration, but I wanted to put it as somebody who is those owners of management companies who usually take a small salary of 2 million rupees, but they take dividends of 10 million. So this is where it gets really so. I'm just taking management companies, but it happens in other sectors as well, whereby just to show your employees you don't take much money in terms of, because this is seen, I don't take much in terms of emolument, but you know the rest comes into dividend, but they get caught now. Okay, new concept. New concept is negative income tax. I have always learned about positive income tax, but the minister has introduced negative income tax. So if your income is a low income, then you are between 5,000 to 7,000, then you can claim a negative income tax, which you can recover from the MRA of 800 rupees per month. So annually, that would make you an additional revenue of 9,600. So this is sort of the more you earn, the lesser you will get as the negative income tax. So, but you have to ensure that you are compliant with NPF and NSF. You're not going to get that just like if you're an employee, you go and say, I want to get negative income tax. It doesn't work. Other measures is the measure on registration duty and land transfer tax for construction of a building used for qualifying high-tech manufacturing. So that goes in the spirit of innovation. So this is, if you're going to do that, you get remissions. And you also get tax exemption on transfer of leasehold rights on state lands on the first acquisition of immovable property, and the Invest Hotel scheme is being extended to cover resale. I think these are pertinent ones in terms of tax administration. So this is a measure which is welcome from my side, because I have a lot of clients which are in arrears when we have to tell them to pay tax, or they have been subjected to assessment. So if your client has been assessed before 1st of July 2015, you can apply under the new tax arrears payment scheme to have the penalty waived. So you get 100% waiver on interest and penalties. But there's always a catch, but you need to settle your tax, to agree your tax by 31st of March 2018 and settle by 31st of May 2018. So I don't know whether it is a sort of a cash flow maneuver that they want to recover maximum amount, but this is a scheme which is open. The other scheme which is also interesting is they have reintroduced for another year for settlement of tax dispute of less than 10 million rupees for failure to pay the 10%. So if you have a dispute with the MRA, usually for them to hear your case at objection, you have to pay the 10%. But you don't have the 10%, then you can always go on the expeditious dispute resolution of tax scheme. Other measures which are of interest is the alternative tax dispute resolution panel. You would recall this was set up last year. And last year there was going to be 3 persons, and they were fighting to get 3 persons to sit on the panel. So from an industry perspective, they wanted the person, a tax lawyer. You have to have a lawyer. You would have to have a person at the level of a director and a person at the level of team leader. So somebody from a director was appointed. Then you had a tax leader from MRA appointed, so you have 2 persons from the MRA. What they wanted to do is bring a lawyer from the MRA to sit on the panel. We strongly objected to that. So this has now been rectified, and now the alternative tax dispute resolution panel is operating. And usually what it used to say is to look at cases involving more than 10 million rupees, but it was restricted to only income tax. They have now extended it to Gambling Regulatory Authority Act, PAYE, TDS, and decisions taken by the MRA. So I think it is broader. The benefit of having the ATDP is that the way it has been set up is it can give you a quicker resolution. You can go faster, but whilst under the ARC it takes years, but this I think they have realized that this is where they are rectifying it at the bottom. So as I was saying to you, ARC, it used to take years before your case is heard. So what they are doing now is they are allowing for written representation. And basically how you do that, you put a statement of case together with your witness statement, and they have to fix the case within 2 months. And once they have heard the case, they have to give the decision within 4 weeks. So I think this is a welcome change, because there is so many cases which are pending in front of the ARC. Where there was hardship, very often when you put objections to the AOADR, you have to pay 10%, but very often taxpayer doesn't have the 10% to pay, but now they would allow the hearing to happen. And the last one is hiding a little bit, is under Section 159 of the Income Tax Act. So basically, if you want to have certainty on a transaction, you apply for a ruling. So once the ruling is given, it is binding. But the funny thing, what they have introduced in the Act, you can go and apply for a ruling. The Director General say, I don't want to give you the ruling. Because under Section 159, as it's set out, it says the Director General shall. But now it says have the option of giving the ruling. This is where it is, not to use the hard word, despicable. Because we want certainty on our structures, but we will not get certainty if he decides not to give you the ruling. Further, in terms of administration, again, necessary amendments will be made to ensure that an obligation to furnish data and information at the request of MRA for the purpose of enforcement of tax law will not be constrained by the confidentiality provision. Very often people say, because of Data Protection Act, we cannot give you the information. Now, they have made it clear, don't come and say Data Protection Act if they don't want to know. You give them the information. So this is something MRA is becoming very aggressive, I can tell you. And last one is under Section 124, whereby there is exchange of information. Very often, and this happens a lot in global business companies, people take plain delaying tactics not to provide information. So now they have amended the law, which will provide for penalty if you don't provide that information requested. So I was saying that to one of the heads the other day at the MRA. Carry on putting penalties, you would not have any business in the future. So it's a shame, but this is a sad reality. They are getting too aggressive, especially on the global business side. Okay. Further, in terms of tax administration, you have the issue of tax deduction at source. So this was not in the TDS. I think it is very important for you guys. TDS was only applied for companies, but now they have brought in société or succession. Then you would not have to operate TDS. So before, if you have a société having income less than 6 million, you would have to apply TDS. But now it is clear that you don't have to operate it. Other thing which you have is TDS of 15% in lieu of PAYE. This is what I was saying to you earlier on. This is the crafty way of getting cash flow advantage on you. And for company awarding contracts for construction work will be required to operate TDS irrespective of the level of turnover. I've touched on that earlier on. This is something interesting. This was actually enacted last year. It was in the budget speech. So every year you would have to submit a statement of assets and liabilities. So what they want to do is they will compare your balance sheet at the beginning, compare your balance sheet at the end to see whether the income that you have generated corroborate. So this is the purpose of doing that. But we had a lot of resistance, and especially from non-citizens. So you have a non-citizen who have made his wealth outside Mauritius. Why does he have to tell the MRA how much asset he has, let's say in Hong Kong or wherever he has? So we have made representation on that, and luckily MRA has now listened, and they would not apply it for residents who are not citizens. No, residents who are not citizens. So the obligation to file the statement is on Mauritian citizens, us, who are tax resident, and basically we will have to provide the statement for the spouse as well for the dependent children. So if you were trying to do some tax planning, shifting some assets to your kids, it doesn't work. But the good thing is, assets costing less than 200,000, I don't think there is any these days, unless it is a washing machine, you are excluded from that. But the other thing, I think, they start trusting people. He says you don't have to submit that every year. But if they feel that there is something abuse, then they will catch you. So disclosure of wrong information will constitute an offense. So this you have to watch out. If you want to try to manipulate figures, be careful. Other thing in terms of tax administration is electronic filing of tax return. Now everybody will have to file tax return electronically. So likewise, an employer will be required to submit a PAYE return and remit tax withheld electronically. So you decide whether you are going to operate that in the direct debit or you give instruction, but it has to be electronically. This is new. Previously, if you had acquired, if you don't have income, but you have acquired immovable property, motor vehicles or pleasure craft, you have to file a return. But now it's saying that there is no need for a person to compulsorily file a return if he has acquired high value immovable property, motor vehicle or pleasure craft. I think they will catch him under the balance sheet. So they realize this is irrelevant now. Last point in terms of administration is in terms of exchange of information. Like I was saying to you earlier on, if you don't provide the information, this constitutes an offense and you would be subject to penalties. I think we can't complete without looking at VAT as well. VAT, so I don't know where they got that idea. So it says if there is security patrol and monitoring system in your burglar alarm system, then this would be treated as zero rated. I think this is lobby. So personally, I think it is lobby. They wanted to get this because when you look at it, it is standard rated. But they want to package it in such a way that now it will be zero rated. VAT exemption granted to corporate body and construction of private hospital, nursing home, or residential care home will be extended to cover charitable institution. And I think this is very topical these days. They will extend the VAT exemption on construction of buildings constructed by third party and to be leased to providers of tertiary education. So, very topical. Again, I think it's lobbies. They had to introduce it in. This is another one which is very topical, which is company under special administration. So I don't have to elaborate on the name here. So if there has been, you will be exempted from registration duty and other taxes, will be exempted on transfer of asset, where the proceeds will be used directly or indirectly to repay policyholders or depositors. So the people at Jardin de la Compagnie will be happy to get additional fund for them. And there will be no charges to NPF and NSF and training levy, and any outstanding, look at this one, wow, this one is outstanding amounts of corporate tax, PAYE and VAT due to the MRA will be waived, which is deemed to be in the public interest. Wonderful. I think this is where the government has a heart to these people. Moving on to other VAT measures, I think this is more for VAT administration. Now it will be mandatory for all wholesalers. You don't have to be under the threshold. So it will be mandatory for all wholesalers of alcoholic drinks, irrespective of turnover, to be VAT registered. Very important for your clients to bear that in mind. And there is a number of provisions of the VAT Act will be harmonized with the Income Tax Act. So what are these? Possibility for an aggrieved taxpayer to lodge an objection in respect of a VAT assessment through electronic means, as well as settling the maximum penalty for failure to submit tax return and pay tax to 100,000 compared to 50,000. This is where bad luck hits you. Providing the adjustment in respect of bad debts to be made in the tax return for the taxable period during which the is actually written off. So you know there is a statement of practice on bad debts. So now it is actually elaborating on that. When the debt is actually written off, then you can bring it in. Last one is, this is where their hands get long. You know, when you do assessments, you're restricted to 3 years. But for VAT, they extend it to 4 years. So this is MRA for you. When they feel that they don't have turf to land on, they just extend the law to catch you back in. Last one is penalty provisions will be introduced to cater for failure to use or tampering electronic fiscal device, because they are telling you to use your electronic means to do that. But if you're going to tamper with the electronic device, then they will bring penalty. So this is in a sort of a nutshell the main tax measures which will impact us. I have not gone into the Land Registration Act and all that, so I've contained myself to income tax, corporate tax. Thank you.
Hi ladies and gentlemen, this is Delhi School of Magic coming for the first time in Mauritius. Get ready to experience a fabulous, mesmerizing, magical family entertainment shows with Kettle's Entertainment in collaboration with ZTV, giving you this show at J&J Auditorium on 9th and 10th June 2017.
You can teach me a lot. You can teach me how to take a step. You can show me how to tie my shoes. You can teach me how to read and write, how to win and how to lose. You can teach me how to cross my T's. You can show me how to dot my I's. You can teach me how to sing and dance, when to laugh and when to cry. You can teach me how to solve for X. You can show me a shooting star. You can teach me how to hope and dream, how to ride a bike, then to drive a car. You can teach me how to achieve my goals. You can show me how to say goodbye. You can teach me how to grow and learn. But did you know I could learn to save a life?